What's going on, everyone? My name's Obi, and welcome back to Courtside Financial, the podcast where we talk about the business and tech trends that are shaping our world. Today, we're diving back into NIO's story, but with a fascinating twist. Last time, we talked about NIO's identity crisis with their sub-brand Onvo and how their battery swapping infrastructure, if not managed properly, could become their Achilles heel. Well, guess what? The analyst at Western Securities just dropped some projections that might change how the pessimists or the bears view NIO's long-term strategy. So here's a headline that caught my attention and probably many of your guys as well. Analysts are expecting NIO's battery swap business to break even by 2026. Now, if you caught our last episode, you know that I was being objective, and in being objective, I was kind of critical about the battery swapping business that NIO has, particularly its financial burden. Each station cost 3 million yuan to build, according to the article I read, and I'm not sure over what time span they were calculating average, but they said on average each station is doing 43 battery swaps per day, and they need 60 to break even. And of course, the infrastructure expansion that's needed to accommodate the Onvo sub-brand look like it's poised to be a serious cash drain for the company. But these new projections from Western Securities totally paints a different picture. The team believes that as NIO's vehicle sales ramp up, those battery swap stations will become much busier. Common sense. But they're forecasting an average of 61 battery swap stations per day by the end of 2026, just enough to cross the break-even threshold. If you want to be a part of the conversation before it happens here on YouTube, click that link in the description to join the free Courtside Financial Discord. Now, I don't know about you guys, but obviously I haven't said this in this video. I'm bullish on NIO, but as an investor, I don't want to see that they're doing just enough. I want to see that they're thoroughly beating that number. I want to see that they're well over 60 on average per day in their projections. Maybe this is a conservative projection, who knows, but that isn't really too promising in my opinion so far, but I'll say it is promising compared to not having it, if you know what I'm saying. Getting a little lost in my words there. But there's some real world evidence backing up their claims. NIO CFO Stanley Q confirmed last November that 60 to 70 swaps per station per day is the target that they need to break even. More impressively, CEO William Li reported that their Shanghai stations are already approaching profitability. Think about that for a second. In our last episode, we talked about how each station is averaging about 43 swaps per day on average. But in Shanghai alone, they're already doing 9,000 battery swap stations per day on average, approaching 10,000. With 183 stations in Shanghai, that's approximately 49 to 55 battery swaps per day on average. So NIO's getting much closer to that profitability threshold in Shanghai specifically. Now, I'm still objective here. There's never a time when I'll intentionally not be, but Shanghai is NIO's home turf essentially, with their most vehicles and their most battery swapping stations. And of course, Shanghai is only one city, but this does suggest that density is key. The more NIO and Onvo vehicles on the road in a given area, the more efficient these battery swapping stations become. And speaking of vehicle sales, the Western Securities team is bullish on NIO's growth trajectory. They're projecting that NIO will deliver 430,000 vehicles in 2025 and 563,000 in 2026. That's year-over-year growth of 94% and 31% respectively. For context, NIO delivered 221,970 vehicles in 2024, with 201,209 under the NIO brand and 20,761 under Onvo. This aligns with NIO's management's own confidence. They stated last November that they expect to double sales in 2025, which would put them at around 440,000 vehicles. So Western Securities forecast is just slightly more conservative at 430,000 vehicles. But here's where things get really interesting for investors. If these projections materialize, then Western Securities believes that NIO is going to see a huge positive impact on the bottom line. And they're pointing to three key drivers drivers. First, the sales of NIO, the premium brand, are expected to grow steadily. Second, the Onvo brand, yes, the brand that was causing an identity crisis amongst 42% of people who already own a NIO, is now projected to grow rapidly as they launch new models. The analysts specifically note that in the battery electric vehicle segment, Onvo's price band is still expanding. So there's more room for Onvo, and more room is being created. And third, their upcoming Firefly should bring about some more incremental sales. But what I find most compelling is their take on gross margin. If you've been following NIO from day one, you know that margins have been a consistent concern. But Western Securities predicts that gross margins in the automotive segment are going to improve drastically over time as volumes grow and new platforms are utilized. So let's connect the dots between our previous episode and today's new information. In our last episode, we outlined several challenges between NIO and Onvo's strategy. The identity crisis being number one, 42% of people who already own a NIO were in opposition to the Onvo rollout. The infrastructure strain, a 30% potential overload on existing infrastructure to accommodate for these newer Onvo vehicles. The financial burden, needing 800 new swapping stations, which are going to cost around 2.4 billion yuan to also accommodate these newer Onvo vehicles. The battery as a service asset burden, potentially 8 billion yuan of battery assets on NIO's book. The social class tension between premium NIO owners and Onvo owners. And lastly, the distribution challenges with third-party dealers, a strategy that NIO was relying on for and is relying on for Onvo's growth. These projections don't eliminate these concerns, but they do show a potential path through them. If NIO can nearly double its sales in 2025 as projected, many of those problems will become more manageable. Higher utilization rates at battery swap stations moves NIO closer to profitability. The financial burden of battery as a service is offset by higher revenues, and perhaps most importantly, if NIO as the premium brand and Onvo both succeed simultaneously, then the quote-unquote identity crisis naturally resolves itself. The market seems to be taking notice too. NIO shares saw a rare surge yesterday, jumping 10.54% to close at $4.72 in the US market. And today in Hong Kong, they continued that momentum. They rose about 10%. Year to date, NIO is up about 12% in Hong Kong overall. Now, I want to be clear, I'm not changing my stance that the Onvo expansion is still risky. But what these projections show is it's possible that there might be a clear path to making it work. The strategy is ambitious, attempting to transform from purely vehicle sales to energy service operations, evolve their product philosophy, and revolutionize their customer relationships. If they can execute on these delivery projections, then the numbers start to make more sense. Here's what I'm watching going forward. Can they actually hit these delivery targets? NIO has a history of ambitious projections, and doubling delivery targets in a single year is no small feat. Second, will the battery swapping stations that we're seeing outside of Shanghai begin to approach the numbers that we're seeing in their home market? Shanghai's 49 to 55 average daily swaps is impressive, but in order to succeed, NIO has to replicate this success elsewhere. And third, can we navigate the identity balancing between NIO and Onvo successfully? Their strategy only succeeds if both brands succeed without cannibalizing one or the other or diluting the premium position. So there you have it. NIO's swap gamble might have a path to profitability by 2026. It's still a high risk strategy, but the projections show that it could be high reward as well. What do you think about NIO's approach? Is the battery swap model genius, or is it just flat out risky? Drop your thoughts in the comments section below, and if you're enjoying these deep dives, make sure that you hit the like button, make sure you click the notification bell icon, share the video, get this out to other people, and join the free Discord in the description below. This has been Obi with the Courtside Financial Podcast, and hey, we'll see you in the next one. Thanks for watching.